But aside from just the truly remarkable nature of the politics at play and this unprecedented third term, is there an impact for some of these multinationals or companies specifically like Tesla, I wonder?
Well, that was the first thing that came to mind, JD, when I saw the Tesla headline this morning. They're cutting their prices for the Model 3 and the Model Y. In the case of the Model Y, by about 9%. And that's the first price cut that we've seen in China this year from Tesla, when in fact they've been raising prices in the United States to compensate for the input cost increases that we've seen as a result of supply chains and raw material price hikes and broader inflation and everything else. So this did catch me by surprise. But when I looked at the China sales data for the summer and the first month of the autumn, it was still really solid. In fact, China accounted for a record number of Tesla car sales over the month of September, just over 85,000. So the demand equation, again, murky, but certainly not one that you would have immediate concern for. It's the biggest electric car market in the world. Indeed, it's the biggest car market in the world. And Tesla does have a foothold, both in brand terms and in production terms, that most of its rivals simply would love to even think about, let alone compete with. But the price cuts do suggest that there's softening demand and there's concern about broader growth going forward. And whilst they were surprising, I think they do raise questions, particularly with a company like Tesla, who is seeing profit margins narrow, both on a quarterly and a year-on-year basis. The two components just don't mix together. You don't cut prices when your margins are narrowing. So it only points to one thing, and that's a demand concern. And we probably should take Tesla's word for it, because they are on the ground in a way that we are not. And they may be able to offer a signal to demand softness that we otherwise wouldn't see from GDP or other data.